Today I'm taking a look at Greggs. They've just released preliminary results for 2021, so it's time to have a little look through and an update and see what's been going on. I did make a video on Greggs some time back. There seem to be quite a lot of things have changed in the meantime, and things have been added and expanded upon. So let's get through and take a look. So Greggs are best known for the bakery products, so coffee, bacon rolls, the sausage roll, of course, and quite a wide range of other sandwich and pastry products, and also some snack products there as well. So they're predominantly a UK business, with quite a good number of stores across the UK, and seem to have been expanding quite rapidly over the last few years, under the direction of Roger Whiteside, who is sadly stepping down as the top man in a couple of months' time. So things have been added on. We've got delivery apps with Just Eat as a package there. We've got Greggs clothing in Primark has been introduced in the last few weeks. Things are changing, and all for the better, I think. So let's have a look. I will admit I am a bit of a fan of Greggs, so you're warned. So let's have a look through the investor presentation as a PDF slideshow that they put together to take a look at the results to the 1st of January 2022. Just quick flick through overview to give the top lines on this one. Okay, so sales are up 1.229 million over the 2020 figures of 811 and 2019 1167. So it's been a much better year for Greggs. The 2020 figures were down because obviously quite a lot of the stores were closed during the rainy season, but things certainly have been on the up in the meantime. Pre-tax profit is up. And they've got a strong cash position as well. It's a special extra dividend of 40 pence a share, in addition to the 57 pence dividend. So that's quite healthy as well. So financial performance. Obviously, in an interim review, we just get some top line figures here rather than seeing the full figures, which will come out no doubt in the next few months. So turnover is up, and the rest is looking quite healthy going forward. There's EPS there, 114.3, excellent. So sales are back above pre-pandemic levels, I think is one of the key messages of the presentation. Yes, there's been some ups and downs over the last year with different things happening that are really outside of Greggs' control. And that has had some effect on parts of the estate, so particularly in the city centre and office locations where things have been closed and restricted, etc. Then the trade has been obviously affected likewise. So margins are up, good. The thing that seems to have affected the share price today, and possibly a little bit in the short term going forward, they are facing, like many businesses, the headwinds of increased overheads in every sector, really, from the fuel, the transportation, staffing costs, and product costs as well, no doubt, will be going up over the next year. And their tax headwinds, full rate of VAT on hot food and drink from April 2022. So that's going to be quite a jump. Capital expenditure overview. This one I found quite interesting there. So in spite of the difficult couple of years, they have been spending quite a bit of money on new stores and expanding. And the plans going forward into 2022 is a very big jump in the capital expenditure there, up to about 170 million. With a much more aggressive expansion plan for the next few years. You can see by the graphs here. So for 2022, 23, 24, and certainly 25 and 6, a little bit slower. Definitely a massive increase in investment to increase the size of the estate. So you have those, you get a chance for a quick read. So coming back stronger, ambitious target to double the turnover in the next 5 years. This is something that I think a couple of months ago was I think the analysts were fairly aware of this one in their capital markets presentation day. And so they were projecting, that's only maybe doubling the size of the business over the next sort of 5-year period. But their reaction in the share price in the last day or so has not been quite so favourable. So currently growing 2,181 shops, including 375 franchise, and they're looking to add an additional 150 shops per year. So it is going to be quite a considerable growth over the next few years. So it's very, very optimistic going forward. And they're looking at their types of opportunities that they have going forward in terms of the sort of locations, because primarily Greggs is associated with being sort of high street and city centre locations for the retail outlets, but a lot more appearing in railway petrol forecourts. I've got one down the road a few miles away from me as part of a petrol station. So the opportunities for Greggs to open more doors, and also inside supermarkets. I think there's been sort of partnership working with Asda going on to develop some sites to increase their sales. They also, as I'm aware, have been doing a lot of work with Iceland instead of actually selling the frozen free product for people to actually cook at home. Evening trade, again another new one for 2021, to go after 4 o'clock opening. To try and gain some additional sales revenue into the evenings. And the digital channels I mentioned earlier, with Just Eat for delivery, and also app introduction, so people can click and collect and order in store, or collect in store. So making Greggs mean more to more people. So Greggs accounts for less than 7% of customer visits in a growing market. 3/4 of Greggs app customers visit less than once a week. Focus on digital engagement to increase customer communication. Make Greggs mean more to more people. The new app launched in 2021, integrating click and collect and offering market-leading reward scheme. They've had under 1 million downloads to date, and they really want to scale up that engagement over the coming year. Increasing the supply chain. As a corporate priorities. A trading outlook. So started well in 2022 with helping the easing of the restrictions. So the one that's concerning the analysts today is cost pressures as a particular feature of 2022. So despite near-term pressures, Greggs is strongly positioned to drive forward our ambition plans to become a larger multi-channel business. So all in all, as a summary of that, I think that there obviously are going to be some headwinds in the year ahead, but they're very much an ambitious business in the longer term. So let's have a little look at my little summaries and see how we go. They're not obviously complete figures because it's just the interim figures there, so we're just taking a few little guesstimates in some places. So turnover has been growing year on year, with the exception of the 2020 downside, which we are all well aware of. Gross profit very much in line with that, and the net profit is heading in the right direction, certainly upwards. So that's good news. Assets and liabilities, from the figures I've got, I need to fill in some more blanks in that one, so we might well just skip over that for the moment. Capital expenditure. They've been down in the last couple of years, but 2022 we're going to be up on 170 million as the projection, so there's going to be a massive uptake in the capital expenditure budget, which may well have a big knock-on effect on the free cash flow figures for 2022. Again, that's maybe a reason why the share pricing might come down in the short term from the analyst point of view, but in the long term, there may well be a very good opportunity there. So let's look at the charts on SharePad over the last couple of years. At the Rony Rona part there, lowest figure there about October 2020, looking at 11.04 per share, and a peak up at just over the £34.12 a share mark. So quite a big jump over that period of time. That's actually the point when the analysts were then saying, "Oh, it's going to double over the next 5 years. That's great." And then the CEO decides he's going to be stepping aside, and the share price has been sort of sliding gently from there. And today's fall really showing where they're talking about stronger headwinds, therefore the price is falling to reflect that, but also the other events that are going on in the rest of the world having an effect on the price. I don't hold a currently position in Greggs. I did hold one, and I sold out about this sort of mark and take a nice profit on that. If it ever really drops right down to that figure, which that would be very hopeful, I think. I feel personally, as an opinion, over the next 5 years, it has got a very good growth, and it's a very solid business to have in the portfolio. So I look forward to seeing your comments in the comment section below, and we'll catch up with you again soon.